Good morning and welcome to this edition of DECRYPTAGE at Africa 24. We are receiving Mr. Abebe Aemero Selassie, Director of the International Monetary Fund for the African Department. Since 2020, the Sub-Saharan region is experiencing her worst economic performance with an economic growth of 3% in 2020. Faced with this situation, the International Monetary Fund, in a report based on the regional economic perspectives published in 2020, traced a trajectory on the economic recessions experienced by the country of the Sub-Saharan region, as well as their growing perspectives. Hence, in this edition of DECRYPTAGE, Mr. Abebe Aemero Selassie will enlighten us on the economic expectations for the Sub-Saharan countries' economies in 2021. Mr. Abebe Aemero Selassie, you published this morning an IMF report on the regional economic perspectives of the Sub-Saharan region for April 2021. How is the economic state of the continent?
Thank you. Last year, of course, as a result of the pandemic, the region saw by far the worst economic outcome that we've seen since we started collecting data about 50 years ago. So initially, we expected the region's economy to contract by 2%. We raised that to 3%. Thankfully, it looks like growth outcome will be a little bit better relative to what we were expecting, so closer to perhaps around the 2% mark. And for this year, as a result of the somewhat less negative growth impact, we're expecting a somewhat stronger recovery, around 3.5% this year. But I think 2 points I want to stress. First is that at 2% contraction, that's still by far the worst economic reading ever for the region. And then second point to stress is that the region continues to face quite a lot of headwinds from the pandemic. Infection rates continue to be elevated in many countries. So we cannot consider the pandemic to be fully behind us until we get people vaccinated. So that remains a challenge.
The continent is facing the impact of the COVID-19 pandemic. What has the IMF done to help these countries address this economic and health crisis?
That's a good question. Really, one of the very important roles that the IMF plays is when countries face such difficult circumstances to provide financing to make sure that the economic outcomes are better than they would otherwise be. So last year, we stepped forward like we've never done in our history before. We extended to Sub-Saharan Africa about 13 times the normal amount of financing that we provide to countries, totaling of around $14 billion. And the aim of this financing, of course, was to protect lives and livelihoods. When hit by a shock like the one last year, what was really important for governments to do was have the resources to provide a much needed support for health services, health facilities, but also for people that have been being impacted, to provide ways of getting support to them. So we provided quite a lot of financial support last year. And this year we hope to continue supporting countries as they switch towards addressing the medium-term economic challenges. A lot of reforms are needed, and supporting these reforms, financing will be important. So we're hoping to continue to support countries and engender strong growth.
Following the first phase of the pandemic, Sub-Saharan countries turned to seek for external help. To the gaze of the fragility of external market, are these countries not risking to contract debts they won't be able to pay back?
So I think one thing I would like to stress is that you use the phrase the first stage of the pandemic. Again, we continue to see the COVID pandemic very much still being in place. So maybe your first phase is the right way of putting it, but it's still something that continues to be a very potent and real threat as we speak in the region. So it's not at all something we need to think of as being behind us. Second, and more relevantly for the question at hand, when you're hit by a shock like this, what happens is, of course, tax revenue collections decline quite sharply. You also have governments needing to spend more than in normal circumstances. So how you fill that gap is a challenge. As I said earlier, one option is, of course, to rely on institutions like the IMF to provide support. Another is to seek financing from markets, which tend to be expensive, which is why also countries tend to prefer to rely on financing from international financial institutions like us and the bank, because the cost of financing tends to be lower. But moving beyond, of course, what you want to see is countries relying more on tax revenue mobilization, tax revenue, domestic resources to finance all of the development spending needs that they have.
Which strategy does the IMF intend to implement to enable sub-Saharan countries to keep a general stability of prices of goods and services at the midst of the pandemic while answering to the needs of the population?
So I think it's not so much our strategy, but what we do is support government's own programs. And in each country, the kind of policies that are needed to address the challenges they face are very, of course, country specific. That's why we rely on countries, policymakers to come up with proposals, reforms, which we will then support wherever we can. So in some cases, the challenge is very narrowly focused on, say, food prices going up. The solutions in the near term, of course, are to find ways in which governments can support, through social transfers and the like. But then more medium to long term is to promote the kind of reforms that are going to be necessary to increase productivity in agriculture. And, it's whether by helping invest in infrastructure, whether, invest in ways to enhance productivity. So that's broadly how we work with countries.
Finally, what are the challenges felt by the IMF in sub-Saharan region in her mission to ensure the control and evolution of price rate?
Like all institutions, governments, private companies, banks, like everybody, we have to observe, working from home type rules, social distancing, not being able to visit countries, interact. So that is a constraint on how we're able to work with countries. So that our mode of operation has had to change in many cases. But I think these challenges pale into insignificance compared to the challenges that our countries, our governments face. So again, our focus really at this time is to help countries deal with the challenges that they're facing, help develop policies, providing technical advice, providing financing where that's needed, and sharing information across countries, because some countries have come up with innovative ways of addressing challenges. So making sure that those approaches can be shared across countries is how we are helping support countries at this time.